You didn't get the apartment. Not because you couldn't afford it. You make $58,000 a year. You had the deposit ready. You showed up on time, dressed right, said everything they wanted to hear. And they still said no. 3 days later, the email comes. We've decided to move forward with another applicant. But your friend, who makes $12,000 less than you, got approved for a nicer unit in the same building, same week. The difference? His credit score was 748, yours was 664. That's it. That's the whole story. And here's the part that should make your blood run cold. Your credit score isn't just deciding what loans you qualify for. It's deciding where you live. It's deciding if you get hired. It's quietly adding hundreds of dollars to your bills every single month. Right now, without your permission. Most people have no idea. You're about to find out everything. Let me ask you something. What do you think your credit score actually measures? Most people say, how responsible you are with money. How good you are at paying things back. Wrong. Your credit score doesn't measure responsibility. It measures predictability. Specifically, how predictable you are as a source of ongoing profit for lenders. Think about that. The system wasn't built to reward you for being good with money. It was built to reward you for being consistently, reliably in debt, and paying just enough to keep the cycle going. That's why someone who has never borrowed a dollar in their life can have a lower credit score than someone carrying $14,000 in credit card debt. The game was never what you thought it was. Here's the 5 ways it's bleeding you dry. Because most people think a bad credit score just means you can't get a loan, maybe a higher interest rate. No big deal, I'll just pay cash for things. Number 1, your rent. Over 90% of landlords now run a credit check before approving a lease. A score below 670, you get rejected. Or you get approved and charged an extra security deposit. Sometimes 2 months. Sometimes 3. We're talking $3,000 to $6,000 up front just to move in somewhere. Because of your score. By the way, if this is landing for you, subscribe. The algorithm doesn't push videos that challenge how people think about money unless viewers actively tell it to. Number 2, your job. This one is the one nobody warns you about. In 47 US states, employers are legally allowed to check your credit before hiring you. Finance jobs, government positions, management roles. They pull your report. And if it looks bad, you don't get a callback. Not because you're unqualified. Because your credit told them a story about you before you could say a single word. Your credit score is speaking for you in rooms you'll never be invited into. Number 3, your car insurance. This one makes people furious when they find out. Insurance companies in most states use your credit score to calculate your premium. People with poor credit pay an average of $1,400 more per year for the exact same car insurance coverage as someone with excellent credit. Same car, same driving record, same zip code, just a different score. That's $1,400 a year gone. Not because you crashed anything, because of 3 digits. Number 4, your phone. Want to walk into Verizon or T-Mobile and get a new iPhone on a payment plan. They check your credit. Score too low. You're paying a $400 deposit up front just to get a phone plan. Or you're locked into prepaid forever. Number 5, your utilities. Electric company, gas company, internet provider. All of them run credit checks when you set up a new account. Low score, deposit required. Sometimes $150. Sometimes $300 every time you move, for the rest of your life, until you fix it. Now, I know what you're thinking. Okay, this is bad, but how does the score actually work? What's it looking at? Good, stay there. Because once you understand the 5 factors that make up your score, and more importantly, which ones actually move the needle, you'll realize that fixing this is not as slow or complicated as everyone makes it seem. 5 factors. Different weights. Here's what matters. Payment history, 35%. This is the biggest one. Every on-time payment builds it. Every missed payment destroys it. One 30-day late payment can drop your score by up to 100 points. Just one. Credit utilization, 30%. This is how much of your available credit you're using. If your credit card limit is $5,000 and your balance is $4,000, that's 80% utilization. The algorithm sees that and panics. It wants to see 30% or less, ideally under 19%. Length of credit history, 15%. How long have your accounts been open? Older accounts look better. This is why closing old credit cards, even ones you don't use, can actually hurt you. Credit mix, 10%. Do you have different types of credit? A credit card, a car loan, a student loan? Variety signals stability to the algorithm. New inquiries, 10%. Every time you apply for new credit, your score takes a small hit. Too many applications in a short period looks desperate. Now those are the 5 factors. But here's the part the credit bureaus don't advertise. 2 of those 5 factors make up 65% of your score: payment history and credit utilization. That's it. Which means if you want to move the number fast, and I mean within 60 to 90 days, you focus on exactly 2 things. Here are the 3 fastest way to move up. Move 1. If you have any outstanding missed payments, pay them and then call the creditor. Ask them to remove the late payment from your report. It's called a goodwill deletion. Creditors are not required to do it. But if you've been a customer, if you have a history, they do it more often than you'd think. One deletion can move your score 40 to 60 points overnight. Move 2. Pay down your credit card balances to below 30% of your limit. If your limit is $5,000, get your balance to $1,500, $100 or under. If you can get to 10%, even better. The score recalculates the moment your card issuer reports the new balance. You could see results in 30 days. Move 3. Don't close old accounts. Don't open new ones unnecessarily. Let the length of your history grow. Let the inquiries fade. Stability is the signal the algorithm rewards. That's it. No gimmicks. No credit repair companies charging you $99 a month to do things you can do yourself for free. Here's the truth. Your credit score is one of the most powerful numbers in your financial life. And most people are walking around with a broken one, losing thousands of dollars a year, and blaming everything except the actual problem. You now know more about how this works than most Americans ever will. So here's what I need you to do right now. Pull your free credit report. Go to annualcreditreport.com. It's free. It's legitimate. Look for errors. Look for old accounts. Look at your utilization. Just look, because you can't fix what you can't see. And if you want to know exactly how to go from a 600 to a 750, step by step, with real timelines, hit the subscribe button. I will be dropping that video next. Smart money, real freedom. Let's go.